2022 has been, of course, a horrible year for stocks, but out of all of that pain has come out some amazing dividends with rising yields as the stock prices fell. And in today's video, I'm going to list off for you guys my top 6 absolute favorite dividend stocks right now at today's prices for 2023 and beyond. What's up everyone? My name is Ale. Welcome back to my world of stocks. All right, so let's go ahead and jump into this. I went ahead and put timestamps for you guys down below in case you want to jump to any specific part, but I've got a wide variety of different dividend stocks here, so there should be something for every type of dividend investor, whether you're looking for value, growth, dividend yield, future potential, the business. There's so many things that we could look at, but I've got a wide variety here for you guys. And if you appreciate that, please just do me a quick favor, subscribe and hit the like button. Those two things help keep my channel alive and it means the world to me. So thank you for all the support. But let's go ahead and jump straight into this list. All right, guys, and counting down here from stock number 6, we're going to start with the semiconductor giant Intel, ticker symbol INTC, who after losing close to 60% of their entire value from the top, has not only seen their valuation plummet to over 40% cheaper than the sector despite being a market leader, but just as important, it's now left them yielding the highest dividend that they have ever paid out in their entire history at almost a 5% yield. And by the way, they've actually grown that dividend every single year since they started paying it, except for just 1 year where they had to briefly pause it without even dropping it. Now, business-wise, Intel stock has been crashing because of the broader PC and semiconductor markets that are now struggling to grow coming off of the pandemic with lingering supply chain issues and lower computer usage and demand. But going forward, there's no denying that these areas of cloud computing, artificial intelligence, autonomous driving, the Internet of Things, and really just anything technology related in general will all demand a high volume of strong performing chips well into the future. And given that Intel is not only a market leader with by far the most CPU market share of anyone across these markets, but that they're also the only one of the big 3, including AMD and Nvidia, that actually builds their own chips here in America, I just think the American government needs them to succeed long term, as is clearly evident with the CHIPS Act that provides billions of dollars in funding so that Intel can build even more manufacturing plants in the States, become an even bigger manufacturing powerhouse than they already are in the semiconductor industry, including what may be the world's largest chip plant ever created in Ohio. And as an investor, I think this bodes very well for the long-term success of their business and the stock, and of course the dividend. And this is why I choose to own the stock myself. If you think Intel is a bit too risky for you though, then you may want to consider my personal number 1 largest investment in my entire portfolio for stock number 5 in Microsoft, ticker symbol MSFT. Now, their dividend may not be as eye-catching at just above a 1% yield, but with Microsoft, you not only get some fantastic growth metrics on it, like a tiny payout ratio, about a double-digit growth rate, and close to 2 decades of consecutive increases on the dividend, which they've increased it every single year that they've paid it, but you also get one of the best, if not the best run company in the entire world that basically ensures those dividends will always be there for you to collect well into the future, into retirement, even passing it off to your children. And that's because Microsoft not only dominates some of the largest markets in the world with their operating system Windows and their productivity software Office being installed on virtually every computer on earth, but they're even the second largest cloud computing company with Azure. They may soon become the largest gaming company with the acquisition of Activision Blizzard. They're likely to become the Netflix of gaming with Game Pass and xCloud. They're the largest professional networking platform with LinkedIn, which is pretty much like the Facebook for professionals, which is a huge deal. They've got the same thing for coding with GitHub. They have a Zoom alternative with Teams. That's another really big deal. It's kind of slept on. They're one of the biggest plays on artificial intelligence, and they're even pushing into new markets like the metaverse, augmented reality, and more. The result is unbelievable financials with mouth-watering margins, like almost $200 billion in sales, with over $72 billion of that going straight to the bottom line just last year alone, and yet they're still managing to somehow grow at a double-digit percentage. But thanks to the bad economy and the 2022 bear market, the stock has now seen one of the biggest and rarest crashes that you will ever see in your life, as it is now down almost 30% from the top, leaving what is usually a golden goose that is far out of everyone's reach, and now one of the lowest prices that you might ever see in the stock when you consider everything. And sure, things can definitely get worse if the economy collapses or things happen in the broader market that drag it down, but company specific, Microsoft is almost always a buy on the dip, and that dividend is really just a welcome little bonus on top of everything else you already get with this really incredible stock. All right, now having said all of that, if you want a bigger yield, then let's switch things up here with a massive dividend for stock number 4 in the telecommunications giant Verizon, ticker symbol VZ, who, after seeing their stock crash by almost 40%, leaving them at literally the lowest price in over a decade, the dividend has now skyrocketed to the highest level in pretty much their entire history. I think the only other time that it was around these levels was during the Great Recession, and that clearly didn't last as the stock had to correct back up so that the dividend could come down to a more reasonable level. Well, I see it now yielding close to 7% with about a 2-decade growth history and a sustainable payout ratio, and I just think they're an absolute steal. This is a market leader, especially in the hugely important business sector in the business market, where they control about half of that entire market, and with by far the highest quality awards across cellular and internet services, which means customers will keep coming back and they'll pay a premium price for that higher quality. And yet, because of the crash, the stock is actually trading as if they're one of the worst options to invest in at over a 50% discount to the rest of the sector. That's crazy. And sure, they may not be very high growth, but neither are their two biggest rivals in AT&T and T-Mobile, which are sometimes even lower, as you can see in that chart I just showed you. So with the dividend as high as it is, and considering how reliable their business is over the long term, I think Verizon definitely deserves a spot on this list. All right, guys, moving on to stock number 3. That's going to be another market leader that has also been getting destroyed over the past year, and that is Medtronic, ticker symbol MDT, which is a stock that I'm heavily buying myself right now as they continue to trade at a ridiculously cheap price. First of all, Medtronic is already the world's largest manufacturer of medical devices with a giant footprint that spans over 150 different countries, with hundreds of clinical trials being implemented and hundreds of products being approved for sale every single year, the result of which is very strong financials with healthy single-digit growth that only dipped in 2020 because of the lockdowns, where people avoided going to the hospitals, and are now struggling a bit this year too because of the horrible macroeconomy where hospitals are tightening their budgets and spending less on new medical products. But those temporary setbacks, coupled with a supply chain disruption in their new surgical robot, have caused a head-scratching crash in the stock that I think is unwarranted and has now cost them close to half of their entire value, leaving this market leader actually trading cheaper than the sector by around 20% on adjusted earnings, and up to 30% cheaper than their own 5-year average, while also raising their dividend to the highest level that I've ever really seen in the stock, and now about a 3.5% yield, which has been increased, by the way, for a whopping more than 4 decades in a row. That's close to dividend king status. And so when you add up the unbelievable history, the market leadership, the future potential of medical robotics, the cheap valuation, and the record high dividend, how in the world could Medtronic not be on today's list? They definitely deserve a spot, and I've been a heavy buyer of this one myself recently. All right, guys, we are now down to the final 2 stocks, and coming in at stock number 2, that's going to be a pharmaceutical giant in Pfizer, ticker symbol PFE, who of course has been all over the media in recent years because of their pepperoni V-Shot, which has not only sold more units than any other V-Shot out there, but in fact, as tragic as the pandemic has been for so many people, it's actually been a cash generating machine for Pfizer, instantly handing them the best selling drug in the entire world by almost 3 times the next closest competitor. And if you think that's crazy, consider that Pfizer sells over 300 different drugs just in the United States alone that before the pandemic generated them around $40 billion in revenue, and yet that one single V-Shot for the pepperoni, which by the way was almost entirely funded by us taxpayers, so it didn't even really cost them anything to make, and yet that one single drug has generated almost the same amount in revenue as all of their entire products combined at a massive $37 billion. That's so crazy. And even as popularity for the V-Shot goes down, Pfizer is already selling a new oral version to make up for it that is estimated to do another $25 billion for them just on its own. The result is that the pandemic will now be making Pfizer the largest pharmaceutical company in the entire world, even surpassing rival Johnson & Johnson, as they more than double their sales this year to over $100 billion, of which Pfizer has of course been using to become an even larger and even more dominant corporation, as they decided to go on a massive shopping spree this past year, acquiring Reviral for over $500 million, Arena Pharmaceuticals for close to $7 billion, and Biohaven for a whopping more than $11 billion. Plus, they've grown their pipeline of future products to nearly 100 different drugs that are already going through clinical trials as we speak. And yet, despite all of this, despite them more than doubling in size and becoming the world's largest pharmaceutical company in just 1 year's time, the market downturn has actually caused the stock to fall by over 20%, which has left their valuation more than 60% cheaper than the sector. That's pretty crazy for the world's largest pharmaceutical to trade this much cheaper than the competition. I really think Pfizer is being slept on here at these levels, and especially when you consider the really nice dividend you get as well that already yields over 3% with a tiny payout ratio and over a decade of growth. Not only do I think that dividend will be around for a really long time, but I also think that the stock price will go up as well, and that makes this an easy choice to include in today's list for a multitude of different reasons. Okay, and finally guys, finishing up here with the last stock on the list, that's going to be another semiconductor company in Broadcom, ticker symbol AVGO, who in my opinion has one of the strongest and most diversified businesses in the semiconductor industry, as they develop custom chips for businesses that rely on them for storage, internet connectivity, and a variety of other needs. Broadcom has also done a great job of expanding into software and services in recent years too, as they even plan to acquire the cloud computing giant VMware, who specializes in cloud infrastructure, apps, services, networking, and especially security, which are all areas that Broadcom has been expanding more heavily into themselves, making the merger even more lucrative for them, with giant synergies being created if the deal gets approved by regulators, which I personally think it will soon, probably around sometime next year. In the meantime though, the broader weakness in the chips market, along with supply chain disruptions, have caused their sales to correct back down from the explosive revenue growth of 15% in 2021 and over 20% this year, back down to the more typical mid to high single digit growth next year that they would typically see, which convinced investors to sell out of the stock this year, causing it to fall by more than a fifth of its entire value, leaving the valuation dirt cheap now at a price to earnings to growth ratio of not only less than 1, which is great just on its own, but it's also around 50% cheaper than the sector as well, which is thanks to, again, the fact that this is one of the best run companies out there with giant profit growth expected of more than 15% on average over the next 5 years, despite them having already put up that same unbelievable growth over the previous 5 as well. And of course, what good would this stock be for today's video if it didn't have an amazing dividend to go along with it? And honestly, this is one of the absolute best growth-oriented dividends out there with a massive 32% growth rate, despite it already yielding over 3% on more than a decade of consecutive increases. Overall, Broadcom easily checks off all the boxes for a great long-term dividend stock, and thus they deserve a spot on today's list as well. Anyway, that's going to do it for this video. I hope you guys enjoyed it. Are there any dividend stocks that I left off the list that you think should have been included? Let me know down in the comment section, because guess what? I can make future videos on those stocks. So make sure you let me know which ones you want to hear about in the future. But thank you so much for all the support and for stopping by. It means the world to me. I hope you're all doing well, and I will catch you in the next video. Take care. Bye-bye.